Is it possible when you retire and start getting on Medicare, you could pay more for your Medicare simply because of how much you made at your job before you retired? It's possible. I'm going to explain an exception coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Corhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. Oh my goodness, we're going to go from 0 to 60 with Medicare coming up. But the big question, I got this earlier this week, and that is, oh my goodness, I was making a six-figure income. I transitioned into retirement, and I got a letter from Medicare saying I'm going to have to pay more for my Medicare Part B and Part D. Why? And is there any way around this? Okay, so let's go from 0 to 60 right now with Medicare and what this means. All right, so when you retire or turn 65, when you're eligible for Medicare, you're going to make the biggest health insurance decision of your life. Make sure that you've got a certified financial planner who is your fiduciary doing comprehensive financial planning to teach the difference, teach the choice that you have, and then sit down with a health insurance Medicare expert to make sure you make the right individual choice and selection. But your Part A, all right, for 99.9% of us, it is not going to be at an additional cost. You've already, the cost of that coverage was sort of covered for you by working enough during your career. So the vast majority of us, Part A, that's your hospital for the most part, your inpatient care, there's going to be no premium for that, no additional premium for that when you retire. Part B, that's your outpatient, that's your doctor visits, that sort of stuff. The base rate for that is $148.50 per person per month. That's Medicare Part B. But that is dependent on your income. We'll explain that next. Part C is Advantage plan. It depends on what plan that you select. You'll have to pay the Part B premium, and then you opt out of Medicare and you go with private insurance. That's Medicare Advantage, Part C. And you'll have to sit down with that Medicare, that health insurance expert to see what plan that you get and to determine what additional premium there is. Going back to Part D, that's Medicare prescription drug. Yes, within Part D, you've got to pick the right plan for you based on your prescriptions. Again, you'll want to work with your Medicare expert and your CFP. We combine those here. Those specialists collaborate. They work together here at Corhorn Financial Group to make sure that you've got the very best, make the very best choice. So that's your basic on how the cost and coverages work for Medicare. Done other videos about that big decision that you're going to need to make. That's not the purpose of this video, but that gives you a rundown of the cost. So why does this matter? Your income helps determine whether you're going to pay that base rate for Part B and Part D, or whether you're going to have to pay a surcharge, what they call IRMAA, an income-related monthly adjustment amount. That's an acronym that you're going to receive if your income is high enough. You're going to receive that in the mail. They're going to call it an income-related monthly adjustment amount, IRMAA increase. Therefore, instead of paying that base rate $148.50, you have to pay more. Okay, let me explain how this works, and we'll look at some of those costs. When you're on Medicare, the amount that you pay for Part B and Part D is based on your income from the prior year. Yes, that's right. I didn't stutter. 2 priors. That's 2 years ago. Why? Because that's your last year, your latest year that you filed everything, and the IRS and the Social Security Administration has information on, okay? So think about this. If you are going to retire at the end of 2021 and you're going to go on Medicare at the beginning of 2022, okay, you can't look at, if you're going to start in January, you're making that decision in November or December. The year's not over yet. Medicare, Social Security, they don't know what your income is going to be. You can't know fully what your income is going to be for all of 2021 in November of 2021 or December of 2021. You don't know. So to look at the prior year, meaning for looking at your health insurance for 2022, the prior year is 21, the prior year is 2020. Yeah, that year's been done for a while. It's been done for, you know, whatever, how many months now. And you filed a tax return. The Social Security, you've got W-2, so the Social Security has seen, okay, these are your wages. This is how much Social Security FICA tax that you paid, blah, 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 okay? So it's prior year, all right? If your adjusted gross income's too high, you could pay more. Take a look at this, the Medicare website. Let's just look at the column for married filing joint. So modified adjusted gross income of 176,000 or less, you're going to pay that base rate. Okay, that should cover the majority of folks. But now, if your income is $50,000 higher than that, now I'm approximating, so 176 to 222, instead of paying $148, you're going to pay $207.90. That's per person, because we're talking about married filing jointly. That's per person, and it's not like you're getting any better coverage for that. You're paying more, getting the exact same coverage. What if your income's above 222? Well, if it's between 222 and 276, you're paying almost $300 per person. If you're above that, now you've almost, so that would be double. You're almost at, what would that be? That's almost triple. If you're in the 276 to 330 range, $386 per person per month. Then it starts really expanding, okay? If you're in the income threshold between 330 and 750,000, now that band really widens, then you're going to pay $475 per person, over 750,000 of income. So you sold a business, you sold a real estate property, you received an inheritance and sold something where there was a big capital gain, something like that. Then you're going to pay that $504.90 per person per month. Now that's still cheaper than buying it on your own in most cases, cheaper than Cobra, but that expense, that cost widens, all right? So that's how that works. Okay, now I've caught you up. Here we go. So you are working, you're making more money than you've ever made in your life, and say you're making $200,000 because, you know, you've got a lifetime, a full career of achievements and skills and all that sort of stuff, and before you retire, you're making $200,000 or more, whatever, all right? Then you retire at age 66, and you immediately transfer onto Medicare. Wonderful. What are you going to pay for Medicare? Part B and Part D. Well, if we look at just Part B, your income from the prior year was when you were working. When you were working, you were making this $200 and some thousand a year. That means you're in this threshold where you're going to have to pay IRMAA, Income Related Monthly Adjustment Amount, right? That's the letter that my friend got. My friend got this letter saying, hey, congratulations for being on Medicare. You're going to have to pay more because while you were working, you made above that threshold. So when we look back to the prior year, your income's too high, you've got to pay more. Is there an exception? Yes, thankfully there is. Check out this form. It is form SSA-44. That's right, it is the exception, the life-changing event. Medicare income-related monthly adjustment amount, life-changing event. If you look at the bottom of that form, it shows you those increases based on your income levels, but it's the top of page 2 of 8. It's the top of page 2. That's what really matters. What is the type of life-changing event? Well, I got married. Yeah, when you get married and file a joint return, now your income's going to look a lot bigger, right? I got divorced. That's more likely where, hey, my income looked bigger in the past. Now it's going to be much lower. Therefore, I shouldn't be paying more for my health insurance, my Medicare, because my income's going to be much lower. Death of spouse, absolutely. Work stoppage, that's the big one. I retired. So I'm no longer going to be making $200,000, $250,000, $400,000, whatever it is. I'm no longer going to be making that. I'm going to be making, you know, just Social Security and withdrawing some income off my investments. I'll be making $100,000, something like that. I don't know. Work stoppage, that is one of the life-changing events that allows an exception to this IRMAA, this monthly income-related monthly adjustment amount. Work reduction, so you're shifting from full-time to part-time, you're shifting from full-time to contract basis. Loss of income-producing property, I sold a building, a rental property. Loss of pension income, boy, I hope that doesn't happen, or employer settlement payout. Those are your options, okay? So if you find yourself in this situation, subject to IRMAA because you retired or because of these other life-changing events, fill out this form. They're going to tell you, make a phone call. You can call into the IRS. It's going to take a long time. It's going to be very difficult for you to do, and they're going to want you to fill out this form anyway. So fill out this form, send it in, be patient. It's going to take a couple of months. And then I would also tell you, I have seen the IRS, or excuse me, the government rule very inconsistently on this. You might see clearly, yep, I was here, this was the life change, I checked this box, and the IRS, the government might say, yeah, not so fast, that doesn't fit squarely in this box. So you might need to go back and forth with them a little bit here. And if you're trying to, if you've got a life circumstance, a life change that's not on this list, I mean, still you can apply for the exception. There's a chance. I mean, again, I've seen them rule very, very inconsistently. The loss of income producing property, I've seen the IRS, I've seen the government, when you sell a building, sell a income reducing property, I've seen them grant that exception. I've seen them not grant that exception in essentially identical cases. But fill out SSA-44 form, work with your certified financial planner, make sure that this shouldn't come as a surprise. My friend that reached out, we just started working together, okay? So this shouldn't come as a surprise to your certified financial planner. They should understand this. They should be talking about this so there's no big surprise, and they're guiding you through this process. If you don't have a CFP on your team, you can contact one on my team, find us online. Korhorn.com, that's Korhorn with a K, wisemoneyshow.com, you can find us there as well, or send us an email, info@korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.